The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more, do we go into the breach, dear friends. We like to meet pretty much every market day at this time.
The following takes place between 2 p.m. and 3 p.m.
We do. And what else can you say about it other than that? We've got a very interesting day in the markets, off about 8 points, 8.5 points on the S&P cash at 2097. Volume is about what it was yesterday. So light volume up, light volume down. When in doubt, get out. I don't see a compelling reason to be either long or short in the maybe even the small or medium term here. Just looks to me like we're probably going to go out somewhere in this area by the close today. I don't see a great deal of bias. I have a feeling a great many people are scratching their heads much like I am, and that is just what went on with that jobs report. This is kind of like going to the rifle range and shooting somebody behind you. Everybody just kind of looked at those numbers and then looked at the revised numbers and said, this is kind of like saying, maybe someone didn't give me as big as a tip that I should have had. And when you said that, I'm thinking, well, maybe I should get a 15 or 20% tip on this bill. And they gave you nothing. Kind of far off. It's not, they didn't give you a decent tip. They didn't give you any tip. Well, this is about as far off as the jobs numbers were. And then you look at the changes that they made to the last couple of reports. And you I've got a kind of a saying that I either say stupid or liar. And this is so horribly off that I can't figure out if these people were high on drugs or they were drunk, partying with those IRS people or something. You never know when you're this far off how you get that far off. In the olden days, you just kept on driving. You figured eventually you would see a road sign somewhere. Today, you've got a GPS that tells you you're pretty much off within the first 30 seconds of missing an exit. Well, it's hard for me to think that in this day and age, you always got to say that, this day and age, that you can be that far off on the numbers and not know a great deal before they come out. You also have to think that when we had Janet Yellen actually coming in on last Friday saying she was going to raise numbers, did something happen in the meantime? Did they give her the real numbers last week and she just lied? Did the numbers just end up getting fixed this week? The mind boggles, let me put it that way. And I think a lot of people reacted pretty much correctly at the open. Now they're really in a quandary out here. Does this really mean that we get no rates hiked? If you looked at the financials today, you would say yes. If there are bigger problems out here, 9 points in the S&P cash down doesn't really say it. Volume does not say it. As I said, it is very tough out here to see a clear, unambiguous signal in a great deal of these markets. And since I'm not worried about the next 30 minutes and trying to make 10 or 15 cents on a trade, I pretty much backed out around noon today and only have my longer-term positions on. But, man, it is, as they say, a riddle wrapped in an enigma. I wonder if we'll ever find out what the true story is on how far these folks went down the wrong road. Anyway, that was kind of it. I think we just need to get to a little history and start this show off.
That it's all just a little bit of history repeating.
It is. In 1980, on this day, the Business Cycle Dating Committee of the National Bureau of Economic Research, the official arbiter of the nation's economic recessions and expansion, finally declares that a recession had begun in January of 1980. Everybody knew that probably, I'm going to say 1978, the recession had come on. But of course, it was a political year, and no one wanted to say and state the obvious. I wonder if it's anything like this particular year. Are we going to commercial here? I don't hear any music. Maybe, maybe not. Don't know. Guess not. Anyway, we've got some other things going on here. We wanted to get to them. Europe, of course, off, mostly off. Germany down 1%. France was off 1%. Spain was off 7%. Portugal off 1.5%. Italy down 1.5%. The Irish down 0.7%. And the Greece off 1.5%. So what do we know about this? Man, with the with the British exit, can you think that there's a lot of impotence for these markets to go higher in Europe? Probably not. We will be back in a moment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we said, volume very, very tepid for the last hour and a half, 2.36 billion shares. We got down to 2085. We bounced pretty much up to 2100, pretty much playing around this 2097 area, 2096 area. But volume, again, is just gone extremely light. And it's very tough to see that there is any particular trend right now that I can see. We'll look at a lot of charts here. Maybe something will pop up in the meantime. But looks to me kind of like we're stuck in the doldrums. If you're not familiar with the doldrums, that is... what is about every 15 degrees or 20 degrees? I think it's every 20 degrees. The prevailing winds change from east to west. And as you go across those as a sailor, a lot of times there's not a breath of wind to be had. In the olden days, with ships in the 1800s, you could get stuck for weeks there. And I'm just hoping that that's not what we have here. Anyway, the first chart I wanted to look at today is allergen. We looked at this a little yesterday, got kind of a little hammer candle on this one. The April 6 high pretty much started to fill this gap from April 5th that came down with 36.6 million shares. We're first in it with 21 million shares. Now we're into it with about 5 million shares. Energy on the way up, a little lighter than you would like to see. But again, none of these things really are screaming right now that we have higher or lower prices, but they look much more like range bound. Again, we talked about some of the financials today, probably as a group look the worst for where the thought is that interest rates are not going higher, that Janet Yellen cannot raise, and these pretty much got the boot, although they are off the lows of the day. Volume kind of in line of what we had yesterday with BB&T. It is a bank. I don't know if they're all over the United States. I know there are a few of them down here. Never been in one. This one, of course, bouncing off its big gap down from the 4th of January. Got back into it with 6 million shares on April 27th. You got into it again yesterday with 4.8 million shares, so 1.2 million shares lighter. And certainly, let's call it 6 million shares down on that January day. Just big trading ranges without a lot of sign that these things are ready to break out. In fact, let's look at some of the stocks out here that are actually moving today, get a different list, and we'll take a look, see if anything in this one actually shows anything. Nice pop up. We talked, last Thursday, that saw the first signs that some of these stocks in gold had come back. Didn't have a lot of volume, and of course, everybody goes to the whip down in gold, and that is feast or famine. Today it is the feast. Nice pop up, decent volume out here. We want to be watching the 1973 high, which is May 17th, that had 24 million shares. What do we have today? About 22, so actually not that bad. The company that makes Ambarella, that makes the compression video chip for the GoPro camera, he said, popped up fairly nicely with a decent volume. What are you going to say? 5.9 million shares. It's back to this resistance congestion range that runs right around in this $45 to $47 range. You had a high in there on the 1st of March with about 1.9 million shares. So you are above that, but you are now going into these candles. The 8th of January, this came down with 4.2 million shares. So actually not too bad. Earnings a little better. I think people are pushing a little bit too much on GoPro today on Ambarella's results, i.e., just because Ambarella does well does not mean that GoPro is buying those chips. but it popped a little bit. I think it may just be too beaten down for what a lot of people have. You could actually make a case that this is coming back for an ABC on the way down. Certainly not the kind of volume that you saw in Ambarilla today. And of course, if other people want to make GoPro-like devices, I'm sure Ambarilla will not turn them down for buying those kind of things. Let's see what else we have out here. I wanted to look at this just a little closer. Hang on. So if that's the A, and we're looking at that as the B. So look at that as the B. So small, hard to actually catch. Just looking to see if this could be a little bit of an ABC down. You got your getting close to your 382 retracement on this. Certainly not any kind of juice even today on this. But I just don't see anything really coming out of GoPro that makes me think this thing is going much higher. I haven't seen anything. And of course, they're even saying that their drone will be delayed until maybe after Christmas this year. So kind of tough. Anyway, if kind of up there, but this would take you to a $5 ABC down if this loses any more juice. AMTD, which is Ameritrade, pretty nice gap down today. Volume did pick up a little bit more than yesterday. And again, a great deal of these hammering away at these highs and gap downs that come, a little bit longer in time frame. Let's see if we can get see if we can look at that. You've got two big gap downs. The first one occurred on June, and what is it? The 4th. Okay, January 4th. So and the second one gaps down on the 6th of January. Both of those, not huge volume, but have acted as resistance. You had a little better volume yesterday and a couple of days before, but man, down on increasing volume today. Everything says trading range to me. Anyway, we will be back. Give me a call, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back at 2098 on the S&P cash volume. Starting to pick up, not much, but it probably was, I think you could probably say volume for the first 30 minutes of the show was lackluster, lethargic, light, and variable. So we'll look at more of these stocks. Anyway, Ameritrade down, more volume. A lot of these just look like they're in these kind of trading ranges and tend to be somewhat stuck. Vago, another semi out here with fairly decent news. It has broken above its previous high. It looks like it's going to hold that high, and it has some decent volume. Would have probably liked to seen the candle looking on the bright side instead of opening at the highs and pulling back a bit. But on a day like this, probably not too bad. April 13th was the previous high, 159.65, 2.1 million shares. We already have 6.8 million shares on this one. And, of course, Avago, Broadcom, all that together. Pretty good move out here. And it really, especially with Broadcom, when you look at them, and I guess we should look at Qualcomm very quickly, since they're both in competitors. Not a lot of movement in Qualcomm out here today, but Broadcom really working on the low end of the business spectrum for smartphones, and that business is still big. The very high end, of course, some Samsung and Apple, probably a little lighter than most people would like. AVH, Avanca Holdings, a nice little pop in this one. It's a pretty light volume stock, but it's gotten right back up to where this thing had a gap down that goes to August 21st of last year. That was about 400,000 shares. Nice pop in this one, 2.3 million shares. And of course, got a little higher, kind of at the very bottom end of that gap now, but all the volume in the world for this one. As we look at more of some of these stocks that are on the downside, Bank of America, all the financials kind of have this, I want to hanging doji looking candle out here today, and that pretty much has you, what can you say? Just, a little more volume out here, but just the hint that interest rates are not going to go higher. And of course, these things have the plague. We'll look at C also. Another one, like I said, all these candles in the financials look about the same. Did get much lower, still holding the gap, or pretty much of the gap down from the morning, but off the worst levels of their day. High volume on all of them, at least compared to the last 4 or 5 days. You had a little bit more volume into the high. You never really pierced it. May 25th, you got to 47.60. That was going into the April 27th high, 47.84. You had more volume, about 4 million shares, but you just went sideways. You weren't able to blow through that. You got no sign of either continuation, and you just went sideways. And there was something out there with these stocks not being able to break out, even with some decent volume into those highs, that told you that maybe there was something to look at and worry about going into the jobs numbers this morning. Citizens Financial Group, it doesn't matter whether you've heard of these financial companies before, if they've got the word financial in it, kind of have these same kind of gap downs and increased volume. I don't know if you can make a great deal about that one. Fit. Some of these stocks with heavy short interest have been moving up, coming down a little bit. This is Fifth Third, excuse me. Fitbit is on here also. But a little bit better on this one. This one did go above the previous high on lighter volume yesterday. April 21st, you came in with 12 million shares at 1906. You went through it yesterday to 1932. You actually held the high on the lighter volume and right back into the trading range again. Energy was off on this leg from May 16th to yesterday's high. Let's call it about 20% compared to the April 7th low, back up to the April 21st high. And that was pretty much it. What else do you have? GFI, most of these gold stocks look about the same. This one actually had a little bit more volume down at its low, 11 million shares to 10 million shares. Energy was about the same on the way up. Like I said, in fact, a great deal of stocks look like these, and that is these bigger trading ranges setting up. Little pop in some of these stocks that have been hammered down all the way. The gap, of course, the retailer, mall retail. A little bit of better news out here today. Doesn't really get you much into this higher price range. Gap down on monster volume on May 10th of 31 million shares. We've got about 8.1 million shares. Again, if I'm looking for some shorts on these, I want to see about half that gap filled. So I'm looking at about 20.75 if you were thinking about shorting these. I don't know. This one's already off $30, but I wouldn't. I'm thinking that you need at least that probably before I would think that lower prices are still coming in some of those retailers. Of course, the big men of the street are watching their stock price head lower. What do we have? 15.5 million shares so far. Gap down. Volume is picking up over the previous few days and will be. You had the nice sign of strength back on the 18th of May with 24 million shares. It's kind of gotten into the top of that, pierced it with the wick of the candle today, but not the candle itself proper. But again, any of these places that have lower interest rates, not feeling the love today. Let's take a look at Morgan Stanley. Again, all these financials, pretty familiar and almost identical chart patterns out here for the gap down and kind of a hanging man out here. Volume has increased almost on all of these. You basically went down to the bottom of this congestion zone that ran from the early part of May into the mid part of May until these things did get their first sign of strength. This one was on the 18th with 20 million shares. And of course, we're into it with 8 million shares today. So it's not as ugly as it could be, but certainly they are moving as a group today. The Magic Investment Corporation, if you're unfamiliar with this company, they do mortgage insurance. Same kind of thing. Down volume has picked up, but again, kind of a little bit of a hanging man candle out here today. We'll see what happens on Monday. Not a real clear indication, but a lot of these had signs of strength off the bottom, and this one was on the 18th also. It had about 10.6 million shares on the way up, and when we look on this, about 5 million shares. So a little bit of everything. And we're only off about 5 points now, 2,100 on the S&P cash, 2.5 million shares. And what do we got here? Yeah, got two more great segments. Give me a call, 877-927-6648. Email me at path@tfnn.com or post a message in the den.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, we'll look at one last financial. We'll look at some other stocks in other sectors. Down on fairly decent volume today. What is it? 1.7 million shares. What can you say about it? Again, looks like all of the rest. Let's take a little longer look at this, though. You've got a couple of gaps, and I wonder if you can actually get into them. This one had 2 decent gap downs, the 4th and, of course, the 6th, as many of these stocks did. Still, all after this entire year, still trying to get back into those gaps. What was the volume on those back in that day? 2.5 million shares. Tried to get into it. Got into it the May 25th with 2.4 million shares. Kind of pulling back. Light and variable. You still have a nice low that has not been tested, which is this February 11th low. And with if the FOMC does not come through this month, I would not be surprised to see those mid lows back in there get retested. There has been a lot in the financial community based on the fact that these companies are going to be making more money with higher interest rates. And if the Fed blinks and can't pull the trigger, going to be very interesting for those stocks. Let's look at a few others out here. Zendesk. I don't see much in that one. Let's see some other ones. WCC, Wesco International. Now, this one was kind of a smaller pattern, if I'm not mistaken, for what I was looking at. Let's get that back up here. And I wanted to see how this one did today. Certainly yesterday, we had a lot of stocks that were lining up like this. Wesco had its April 28th high, $59.55 with 1.9 million shares. Got into it with 464,000 shares yesterday. So basically, we're getting into previous highs with 25% of the volume. A little bit of a pullback into the trading range here, but not a great deal of volume either. Less than 300,000 shares. And we still have, what do we have here? An hour and 15 minutes to go. So I don't think you're going to get any kind of volume or push back up. But at the same time, you're not getting kind of juice that you would like to see on the way back down. Let's see. Hopefully I answered all the questions in the email. Vishay, the Chinese company. This one I wanted to see what it was doing also. You've got three highs, each one a little bit higher, each one with a little bit less volume. And I'm probably even, less is probably not a good word, much a lighter volume. Been watching this one. First low comes in on March 8th, or first high comes in on March 18th, 1278, 2.6 million shares. Breaks it, goes above it, back into the trading range, only 1.9 million shares, but does go above it and break it. We get one more push back up here, no sign of strength. And 1326 yesterday on 1.2 million shares. Again, today, 600,000 shares. So we continue to move in these things. This could have been down 20, 30 cents on a $13 stock. It's enough. But not a real clear sign either. But a lot of these hanging men, hammers, a lot of things out here today looking like that. So Monday, I'll be following a lot of these particular stocks to see if there's any more developments in these stocks. VMware, another one that hopefully I've got this thing that has some major gaps on the way down. It's just getting back into its first major gap down. This or the last major gap down. This was the 21st of December when this thing fell apart on earnings with 21 million shares. Came back up pretty much. Its first stab was December 1st with 4.6 million shares, got to 62.82. We are back up there about 20 cents light, but about 2 million shares today against that 4.6 million share attempt on December 1st. And of course, that gap down that actually happened on 21 million shares. VMware, of course, the maker of router and router software. A lot of really cool products out there, just has a lot of problems. Mostly they have to do with one of their big investors owning too many shares, I think. And too many cooks spoil the soup. What's Panera Bread. Who doesn't like Panera Bread? What do we have here? Let's take a closer look at this one. Okay, there we are. Got a question that in is sideways trading and this big move in the morning on gold, a positive move. I tell you what, like I said, we may have some move and some some moves here before the end of the day. But I don't see enough juice either way to make me think that I've got enough information to really start putting trades. I'm kind of standing back right now. I will look and see what happens on Monday. I think that's going to tell me a lot more about what's happening in this market than maybe today. I think there's a lot of confusion. And I think over the weekend, market participants were probably going to think a great deal about what the jobs numbers meant today, what the Fed will do. And by that time, I think we're going to have a much better view of the market, which may be vastly different than we see today. So I'm willing to bring in most of my positions, as I said earlier, and wait for Monday to get a better look and see at these things. Panera Bread, a nice little high out here. Jack in Clearwater wanted to look at this. You know, you got nice light volume at the highs here. March 8th, 1.4 million shares at $220. You got into it with $219 on April 20th. You drop to 1 million shares. You get into that. Actually pierce it on June 1st with 410,000 shares. Yesterday we had 351,000 shares. Today, 240,000 shares. Not really backing off, down with a little bit lighter volume out here. But, you know, it's not real bullish. Let me put it that way. And you would think going up to these higher highs out here that maybe we should have at least a few short squeezes. And I do not see any of that either on many of these. STAG. Another one of these stocks making light volume. This one has a little doji out here today, which could be very interesting if it closes back in the trading range on Monday. STAG had its previous high on May 10th with 630,000 shares. Got into it yesterday with 470,000 shares. We popped above it today, but just at 200,000 shares. And you can kind of see where I'm being a little reticent to go out on a limb. They're holding higher highs, but the volume is pathetic on a great deal of these. A little risky. I'm going to wait for a better view come Monday. Come Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. We'll look at a few more before the end of the day here. LRCX. Lamb Research, LRCX. April 21st, $83.83, 3.9 million shares, 2.8 million shares yesterday, back into the trading range. Today, a little hanging stock. You know, energy has been kind of good on some of these biotechs off these recent lows. We talked about that a bit ago. But most of them have kind of started to peter out as they've gotten back to these previous high levels in volume. You had some decent volume back on 3.7 million shares on the 27th of May, but need kind of just a little bit more. If we go back to December 29th, you had 4.5 million shares. So, you know, I just don't see the kind of juice that makes me think that these things are really ready to pop out. Maybe a little bit more consolidation, maybe a little bit of a pullback. Maybe they need to get just a little bit more steam, and or there's the possibility, of course, that they fail. Some of these other stocks out here of light of volume, Lexington Realty Trust, LXP. This one going through its May 16th high, $9.54, 2.4 million shares, 450,000 shares today. Again, it's going to hold its high. But I'm not going to say that this is a very beautiful high with 450,000 or 460,000 shares out here today. You had, you know, some decent volume, 1.2 million shares on the first, but that's still 50% of that May 16th high. So we have plenty of these stocks out here that look are acting like maybe they could break out, but not the volume. Five Below, we talked about this one, I think, yesterday. Great energy off the bottom. You've got volume out here today, 2.3 million shares. Should be able to hold its high, so you want to watch how this one closes in at the end of the day. April 27th, 1.3 million shares at 43.42. Got to $44 today and pulled back in. You know, this is one of those retailers that is hot as a firecracker. I think it's size 5 and below, maybe. I don't know. I've seen the store. I have not been in it, of course. I'm pretty sure it's a woman's clothing store, but tough. Let's take a look at CAT. There's been a lot of discussion about that on Financial Infotainment today. I wanted to see if this thing actually was bringing any volume or any heat to some of these candles, basically going back into the May 4th downturn of Caterpillar. This is about halfway in this move down. Back then, you had about 7 million shares into it so far today with 4.2 million shares. And that's where it really gets me. These stocks are kind of coming back up. But certainly when you look at some of these candles back, 8 million shares, 7 million shares, even 5 million shares on days where the things just kind of went sideways. But on the way down, most of these big candles in Caterpillar had about 8 million shares. So now you start to have to think, okay, where are we at on this retracement business? Is this thing back to its 50% level? And that is problematic. About 50, that's 75 is 50% retracement, and 36 gets you to the 618. So you kind of have to look at that too. What else can you say? Do we have time for one more? No, we do not. We've run out of time, folks. Hang on for Tom O'Brien. He'll hang on with you from 3 to 4 and call the closing shots. And we're just off 3 points now in the S&P cash, 2102. Volume still incredibly light, though. And that is it.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.